Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, April 17th, 2019. It's 3 o'clock p.m. as I'm starting the video. Normally I'd wait till the market closes to do a market wrap video. I'm not expecting anything big today. We really don't have any very significant developments in the market yet. I'm seeing a lot in the charts today, and I wanted to do this video to cover some of the things I'm looking at, particularly in the tech-heavy NASDAQ 100, QQQ, the tech sector itself. So we'll keep this one relatively quick. I'm going to walk through the market real quick and look at the major indexes. Let's start there. This is the SPY daily chart. Here's that trend line I'm watching. Now this is interesting because we're cracking and trading below that trend line, but that doesn't mean anything to me, at least not today, because it's the only index that's trading below there, and we still have an hour to go. Just looking at the 1-minute charts, I'm seeing, we're starting to lift right now off the lows. SPY has been trading red most of the day. We started off with those sharp sell-offs this morning here. I'll show you if you haven't been watching the markets. Right here, you can see SPY just, sharp dive down after the open. And then continued lower all day. But again, all right, let's not even pay too much attention to the intraday charts because that's just noise. Daily charts, we'll watch that candle, but again, it means nothing if we don't see QQQ and XLK, the tech sector, breakdown as well. But I wanted to give you the big picture because it's close. There's those divergences, and I know this is the same old grind every day, same story. Yes, divergences. Yes, inching higher. But things could at any point in time, if we do get a reversal here, it could start with a bang. So you want to have your ducks in a row and watch these levels. So there's SPY. Let's just run through them all real quick. DIA is the Dow Diamonds, the Dow ETF. You can see it's same story. And this is the same story with just about everything. Wedging higher with divergences, clear divergences in place as well. You can see the PPO clearly making a lower low, with the RSI making a lower low as prices wedge higher. The Dow is still off its all-time highs there. And roughly, and again, don't get tied up in whether something pops 1, 2, 3% above a previous high. For all intents and purposes, we still have very much the potential for a triple top failure here. Those, should we reverse soon, give or take within, 3, 4, 5% of this level. But again, trend is up until that trend line's broken. And if it is broken, you want to see impulsive selling. You want to see a daily close. And, if you're new to my videos or the site, what's impulsive selling? That red candle, that's impulsive selling. That's impulsive selling. Came after those previous trend line breaks there and there and there. I don't have the trend line drawn right there, but so that's what you want to look for. So there's the large caps. Well, we didn't get to QQQ yet. We will in a second here. Mid caps, don't forget about them. Bit important part of the market. I don't cover them very often, but you can trade the mid cap index. That's the S&P 400, I believe, is the name of the mid cap index, and MDY is the tracking ETF. There's your divergence. So simple stuff. Watch divergent highs. Divergent highs are not sell signals. They're just merely an indication that an impending trend change is likely. But sell signals come on the break of a well-defined trend line and/or support level, like that with that red impulsive candle. Boom, correction back in January of last year. Walked up in a perfect textbook bearish rising wedge, breakdown, and then boom, that's all she wrote. So right now we have, in the last 2 years here, we're looking last 2 years, we've had 1, 2, 3 divergent highs on the daily time frame of MDY. Will this one play out any different than the previous 3 right here with that correction, and that correction? I don't know. Time will tell, but trading's all about playing the odds and statistics and probabilities, and so we look for that. And again, we look for a break, really. This one, I'd have to hone in and try to give you an uptrend line here. There's a minor trend line for sure right there, and that one's cracking today on MDY. So just something to monitor. If we see more downside tomorrow in the coming weeks, then we could certainly have a confirmed sell signal on the small caps, or the mid caps here. But remember, they're only going to go so far as long as QQQ and the big FANG stocks keep lifting the market. So don't expect any type of waterfall type sell-off or big correction in the small and mid caps with the large caps going up, because they can disconnect, and you can see here this is MDY, or I'm sorry, this is IWM, the Russell 2000 small cap ETF, still well off its highs. It's about 10% off the all-time highs from last year, and looking a lot weaker than the rest of the market. In fact, it didn't even put in divergence because it couldn't even take out that high from back here in February yet, and a pretty big red candle. And that's something to note too. Before I get off those two that I just covered, MDY, look at the bearish candle too here. Let's turn off all the lines for a second. That's a bearish engulfing candle. And yeah, we've had, well, actually I don't see any, well, right there, but that didn't come at the end of an uptrend. That wasn't at the high. So there's something to watch. Here's a bearish engulfing candle. Watch for another red candle tomorrow. The redder the better, as I like to say, for a sell signal. But you also, again, until the large caps break down, tech, which I'll get to here in a second, we may just see more whipsaw signals like we've seen for short setups yet. And I already covered DIA. I just want to look at the candle. Oh, we're okay there. All right, back to IWM, small caps. Big red candle, bearish engulfing candle so far has wiped out 1, 2, 3, 4, the last 4 candles, last 4 days of trading. IWM was hit hard this morning. This is the open right here, the yellow dotted line right here. That's yesterday's close. So we gapped up and then they sold it hard. IWM so far from today's highs dropped 1.84%. So something's going on there with the small caps. Somebody wants out in a bad way, and that's what's happening there. And you also have, I should add a resistance level here, because you can see a lot of reactions. I'll just show you where that line, why I put that line there. I have reactions here, little reaction there, but most importantly, recently, these reactions here. So this is a pretty big level for IWM, the small caps. If they can punch above it, great, but it wouldn't be a breakout I'd chase. Why? I'll show you why here. Let's color this line. Let me change my trend line color down here. This is why. Any breakout in the near term will only extend these divergences. And again, we have divergences on all the indexes now. So that's what a breakout in IWM could look like, followed by a reversal to put in a divergent high. So that's small, mid, large caps. Now let's look at the market, what's holding the market up. And that's this guy here. QQQ. So what I wanted to do is look at some things that stand out to me in the Qs today. First of all, it's up. It took a little pressure like the rest of the market, after the open when they sold off. But so far you can see this yellow dotted line. It's remained above yesterday's close. End of day, if something happens, late session dump, look for a break. You can see it's been bouncing off about this 180, we'll call it 186.60 level. Today we've had 1, 2, 3, about 4 moves down to that level. If it goes much below there, it will turn red for the day. And so far the trend has been kind of sideways to mostly down. Again, I don't want to read too much into intraday price action here, but I do want to look at some of the components of QQQ and point out a few other things here. So there it is, steep rising wedge. The divergences are still intact. Again, whether we popped, I didn't even look. It doesn't matter to me, again, whether we pop the highs by a few percentage points. We're right at those levels, so maybe we'll close with a new high in QQQ today, maybe not. We'll see what the last few hours bring, but here's what I wanted to show you. QQQ, let's look at the holdings. Let's sort these one of 3 ways. These are the list of all 105 items, well, 104. You have a little more than 100 because some companies like Alphabet, you have the 2 share classes, GOOGL and GOOG, and then QQQ is also on this list. So this is basically the 100 companies within the NASDAQ 100. I weighted it by market cap. So this shows you the FANG stocks, FAAMG. Those are the top weighted components right there, and there's a percentage gain. So Facebook is just slightly red today. Amazon, before I started the video, was green. Now it's gone red, but you can see, so pretty much here's what's lifting the market today. And we have a Qualcomm, we have a big move up there, and there's a couple others, so I'm not going to completely dismiss that. But all right, so here's the but. We're up 0.26%. Yet I use my real-time breadth indicator. I use with this charting program. What I'll do here, I'll show you how I do that. I put a video in the past how to do this, but here we go. So you take the components of a sector or an industry or whatever you're looking at, an index in this case, and you sort it by the gainers. So we go down here and I'll scroll down and click on that one. Just clicked red or green. It's flat. So I'm going to click on Mondelez right now. And that shows me that 43 out of the 105 items on this watch list are green. So therefore you have 57 plus 63 that are trading red. So you have more companies down than up. So that's one thing. Let's also look at those that are up. There's Qualcomm, as I mentioned. Qualcomm, just shorts getting squeezed out of with the settlement agreement yesterday. They followed through today on top of yesterday's huge gain. I mentioned this on the site this morning that Qualcomm actually, that would have been a beautiful just quick one-day day trade, pullback trade, because it ran right into resistance, its all-time high. This is 2014, a weekly chart. Kissed that level almost perfectly, right around 82, pulled back from there. Big divergence on the weekly. If the market rolls over, I'll tell you right now, and I said this to the members of the site, I usually don't give individual trade ideas on the public updates, but I'll tell you this one's beautiful. It looks beautiful for a gap backfill. You need to see the market break and tech break, and if so, you're looking, even from where it's at now, about a 10% pop. Otherwise, maybe it wants to go on and pop these highs. Again, not crazy about jumping in right here. It would have been a nice trade there for a quick, 6% or so pullback trade from where it was. I think it dropped earlier in the day, but there's Qualcomm, and I just want to mention up 11.43%, and that is one of the, it's a pretty good sized company within the Nasdaq 100. It's a $63 billion or $69 billion company. All right, so if you look at the gainers today in QQQ, strip out Qualcomm, you can see, there's a few that are up. Here's some UAL, CSX reported, Pepsi. These all reported today, so they're getting a boost. But for the most part, most of these stocks are up just under 1% or around 1%. And now you flip it around to those stocks that are declining today in the Qs, and you see it's just a lot of red paint right there. And a lot of these are biotechs. Biotech sector's down hard today, but I want to go through these charts. This is what I wanted to do because this stood out to me. You're seeing these big red candles, and again, these are big companies. The Nasdaq 100 has the 100 largest companies within the Nasdaq Composite, which is a universe of thousands of companies. So you're seeing here, and these charts were indicative of what's happened today. They were showing you had the divergence. I could sit here and draw trend lines all day long, but you can see this wasn't random coincidence. I often talk about this. Earnings season, it's always a crapshoot to hold a stock in earnings. But as I often say, much more often than not always, but more often than not, if a chart is clearly bullish or bearish, and I don't even know if Alexion reported today, to be honest with you. This could be, because this is biotech, the whole sector's down. Somebody must have reported some bad news today in that sector because of biotechs are getting whacked. But again, it was priced into the charts here. You can see the divergent high. It was clear as day. And this is a big down day for a NASDAQ 100 component. And we go down the line and I'm seeing the same thing. Here's VRTX. There was an uptrend line right there. We didn't have divergence because we didn't make a newer high right there, but we had sort of this triangle pattern and just a big down. And this is usually how major corrections or trend changes begin, with these type of candles. The stock had already started moving down impulsively, and it's having a waterfall type sell-off today. And again, a lot like when you go back to the Qs. That's how this started here. That's where you usually see those big candles. You usually don't see that, just a little correction with a candle like we did there on VRTX. Let's go back to the components. So there it is. We're seeing a lot of selling, and again, I'm just going down the line here with the components. ISRG up next. Intuitive Surgical. This one was on my radar for a short trade, but I didn't set a price alert. Shame on me. Would have broke. Yeah, it looks like it triggered a couple days ago. 2 days ago, there was a breakdown there with a red candle. Followed through yesterday, and another big down day today. So again, it's more of the nature of the selling. I'm not just focusing on, well, okay, so, we have more stocks down today in the Qs. This is what. If what we're looking at now is just a bear market rally, what we've seen off the December 24th lows, when the reversal starts in the broad market, it will probably start to look something like this. Now that hasn't even happened yet. Again, We need to see QQQ break down and all those other indexes that I just showed you. SPY is starting to crack, but that again means nothing if the others don't break down and confirm. BMRN, look at that bloodbath type sell-off. And again, you can go down the line and see this was a nice symmetrical triangle pattern breakdown. And there's probably more to come. Usually you don't see this type of impulsive selling and then the stock just continue on up. REGN, Regeneron, let's see, yep, already took out that downtrend line as well. And down the line, here's one that hasn't broke yet. There's one that's another one that's poised to break down, hasn't done it. And this follows a false breakout right there. That's something, you can see it popped above that downtrend line, couldn't hold it, it fell back in. So all right, we'll stop there. I'm going to go through these, the components of the NASDAQ 100 looking for trade setups. I just wanted to, again, point out what stands out to me as very impulsive selling when you you look at the under the hood, flip the hood up of the NASDAQ 100. And if you stripped out, again, Qualcomm alone, you take that one out today and you have the Qs down. And if you don't believe me, if that doesn't make sense or the math in your head doesn't work, because it is a market cap weighted index. So again, when you get down to the bottom 20 components of QQQ, they don't have nearly the weighting the top components, but you can just pull QQQE, which is the equal weighted index of QQQ. And that strips out that heavy impact that Apple's having today on the Qs, that Qualcomm is having. And you can see right here, big bearish engulfing candlestick. I don't think we've seen one. Let's find, there's the last bearish engulfing candle that we had, and that was also the biggest correction that we've had, since a rally, at least in months here. And that was a drop of about almost 5%. So something to watch, and what you'd want to watch for tomorrow, as I often say, bearish engulfing candles aren't a standalone, or at least not a very high probability sell signal. You want to see it confirmed. Confirmed means a second red candle tomorrow. Even better if we can get one the following day as well. Otherwise, sometimes you get these and the trend just continues. But that's worth pointing out there. And again, it shows that the difference between the NASDAQ 100 index, which is very top heavy weighted to the components, and the NASDAQ 100 equal weighted index, which we're looking at here. Now it still needs a break. It hasn't broken down, but I mean, look at this. Same divergences building as we have on SPY and QQQ. We have the PPO poised to make a bearish crossover there. Yeah, what I was doing, sorry guys for the pause, I was trying to look, I was noticing here, it seems like be a pretty important level. That was a breakout there for QQQE. And so therefore, if we come back in, watch that level. Again, I'm looking at reaction highs along the way here. But here we have, again, just like we did back here, a wedge type pattern, at least an uptrend line. That's just our divergence line, breakdown. And again, so what you want to see ideally right here is something that starts off with a bang like that. In other words, an impulsive move down following a breakdown. So that's that. And finally, that brings me to tech. As I say, when tech dies, the market dies. Tech is the market, largest component of both the S&P 500 as well as the NASDAQ 100. And, same story. It seems like forever, and maybe it won't pan out. But right now we have, just like we had back here, divergent high, divergent high, divergent high, another divergent high. The only thing lacking this time around so far is a sell signal. That sell signal would come on a break, ideally an impulsive break below the subtrend line. Like I said, nothing, and it's all green today, 0.44. But before we wrap the video up, let's take a look under the hood. Okay, here's what's lifting XLK today. I've sorted this list by market cap. So you can see it's the same usual suspects that are holding up the Qs in the market because it's so tech heavy. There's Apple, biggest company in XLK, Microsoft, all that holding it up, and of course Qualcomm as well. So like I always say, to me, QQQ is basically XLK with an Amazon kicker. That's about the big difference there. You don't have Amazon and XLK. Other than that, the charts nearly mirror each other. But to take a look at how things are doing today, let's just sort by the number of stocks that are trading positive. You can see at the bottom there's 69 items or components in XLK. So let's go down and do a quick market breadth check. I click on the last positive one. That tells me 32 of the 69 stocks are trading positive. So therefore, again, you have negative breadth, more stocks trading down, yet the index is up. And again, thanks to just a few large, mega cap stocks, that's where the money's been flowing. And hey, you know what? That trend continues until it doesn't. And we all saw what happened last, in the fourth quarter of last year, when you have a rush for the exits on a crowded trade. So as of now, the party's still going. And until and unless those trend lines get taken out with conviction and we get some decent sell signals, that's it. So we'll continue to watch those, and and there's a lot of other things out there as well. Just put out a video today on gold, silver, the precious metals, and the dollar. So those are some other things I'm watching there, as well as an update to the shipping stocks that I've highlighted recently. They continue to run. The auto part makers, things like that. So that's where my focus lies as far as trading opportunities right now. This is just this is just a potential trading a setup, and a setup is only that. It's just something to watch until and unless you get a buy or a sell signal. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.